Hey, what is going on, guys? Edward here, back with another video, and I decided to make this one in particular to help beginners. If you are just starting to jump from SMC, from smart money concept, to ICT concepts, I'm sure you're very confused when it comes to order blocks. I am very sure. Okay. Now, this video is going to help you now understand the difference between this type of order blocks and the ones you've been actually finding um, on SMC based on smart money concept, right? Now, these order blocks that I'm going to show you, these are based on ICT concepts, and uh, I just hope this can actually help you clarify. I'm just going to make it as clean as possible and easy as I can explain it. So let's get started. I have two examples right here on my chart, right? This is a bearish example, and I have a bullish example. Now, on the bearish example, we see the structure of the market looks like it's actually going this way until it finally sort of breaks, right? We're actually having a break to the downside. Now, here we can actually see that price recently it's breaking an old low, okay? Shifting, changing direction, okay? This could be I know based on SMC it's going to be called a chalk. So where does the order block actually is formed? The order block is actually formed right here. This you see from here, from this low, basically, the beginning, the opening price of the first bullish candle, right? So how many candles we have? We have one, two, three, four candles bullish all the way to the top until it sweep this previous high right here, right? So all those four consecutive candles forms an order block. Okay. Now, but what happened? What's the idea with this thing? Well, remember that the ICT concept normally looks for liquidity sweeps. So, I mean, if you find this formation anywhere on the chart, this is not going to be. It's not going to work like that. If you find an order block this way, just anywhere on the chart, it's just not going to be that effective. Okay. In order to for this to play out really well and to be effective, is that you need to see an old high being taken, okay? Old liquidity. So you want to see buy side liquidity being taken, not just this recent high, but an old high as well. Don't worry, I will jump into the charts in a few minutes. You will see what I mean, okay? But you need to see, it's necessary, it's mandatory. You need to see buy side liquidity being taken. After the buy side liquidity is being taken, this last push, if it gets disrespected, if it gets broken, especially like it has to be very aggressive. We have to see a displacement to the downside. Once the first candle that closes below, you're going to need the body of the candle, not the wick. You need the body of the candle actually closing below the opening price. Okay. Now look, what is the candle that actually closes below the opening price of this one? It's not this one. It's not this one. This is the one that actually closed below, a little bit to the downside, right? What does that mean? As soon as that candle closes, that validates my order block, which is right here, this four candles to the upside. Remember, we're trying to look for a reversal. So what does that mean? Well, that I am trying to look for sales, right? In this case, this is going to be a bearish order block. Okay, so as soon as you see this candle, look at what I'm going to say. As soon as you see this candle closing below, automatically validates this order block. So it means that you can right there. As soon as that candle closes, you have to wait for the body of the candle to close. As soon as it closes, you could be making the entry right there, placing a sell limit order, stop loss above the previous high, and take profit. Well, 1 to 2, 1 to 3, whatever. Or you can use the Fibonacci from the high to the low to use the projection and target, right? But this is where you normally enter, okay? This is where you were enter in this particular scenario, right? On the sell. Now, on the buy scenario, similar thing as well. You see that we had the market actually going to the downside first, right? Sort of something like this, right? And then boom, right? And goes. You see that, by the way, this candle just got tapped in, right? This order block got tapped in by this candle. So barely gap tapped in, and then immediately you see the reaction. In this particular scenario, it happened a little later, but look at what is happening right here. It's important that you see not just this recent liquidity being taken, but an old sell side liquidity being taken. Okay, once that gets taken, and you see you're actually able to understand the last move, where it comes from, right? One, two, three candles, consecutive candles to the downside, gray candles to the downside, or bearish candles, right? Um, the price immediately after that displaces up. You can see that candle that validates the order block is actually this one right here, right? Because that's the candle that is closing above the opening price of this one, right? This last three candle move to the downside. Once that get broken, that's showing you the change in the state of delivery, basically, right? So we do have a formation of an order block. This is the actual order block. Okay, it's not the top of the week, is the opening price. Okay, the opening price of the candle. So once you have that, what's your job? Your job from there is, if you want, right away you can place your buy limit order, stop loss below this low, take profit, you go higher. Again, you can use your fib from the low to the high using Fibonacci extension to target. If you don't know what I'm talking about, well, yeah, make sure to watch my playlist based on ICT. I do have a lot of videos based on that. You're going to be learning a lot from this, since I'm just focusing in this particular video just on order blocks. Okay, so I hope it makes sense. You see what the price did as after the impulse, pulling back, and then continuation to the upside. Okay, so this is basically what you need to find. Okay, as simple as as it can be. All right, let me jump in on the charts and show you some examples. All right, look at this one right here. We're actually having um, from here, looks like price seems to be dropping. I have this low right here. I just want to see what price is going to be doing. Is it going to be pumping up? Recent liquidity had been taken right here. If I want to go, let's see, sell side. This is a recent liquidity sweep, right? Remember, I need to see also not just a recent liquidity sweep, but an old liquidity sweep. How old can that be? Doesn't matter. Doesn't matter the time frame. Like it could be um, from a month old, depending, of course, on the time frame. It could be very recent, from a 5 minute, just a couple minutes ago, right? It doesn't matter as long as you have the formation. Now, for example, right here, you see the price actually swept this recent liquidity. Probably the order block would have been in this area if after the sweep price displaces up and closes above the opening price of this candle, then I would probably have an order block right here, right? But look at what it's doing. Price is actually continuing to the downside. Now it's sweeping another low. So it means it probably wants to still continue going to the downside. Let's see what it's going to do here. We have a very strong move to the downside. Now sweeping an old low. We have sell side liquidity here being taken, right? Now, where can we mark up our potential order block? In this case, we could have a potential order block right here, a bullish order block, because I'm trying to look for the reversal. Remember, this is ICT concepts. I am not trying to look for a supply, for a demand zone anywhere here to expect this, to expect this, and then go to the downside, right? No, I'm not doing SMC, doing ICT concepts. So after the liquidity has been swept, what I'm trying to do or find here is a reversal. I want to see the price actually now going back up. Okay, that's the whole idea. So anyways, let's say what the price actually is going to do from here. Starting to see displacement to the upside. Look at what you have automatically right here. Look at this huge push, right? Now, once that candle closes above the opening price of this one, guess what? You already have your order block. This is your order block right there. That's the order block, right? I'm just going to focus on the opening price, right? Because anyways, my stop loss, I'm not going to be marking up a box right there, because I know once the entry is right here, the stop loss has to go below this last manipulation low, okay? And the target, I could use the fib from the low to probably this high, this last manipulation move. I can go on projections, and I could be targeting either this recent highs or between 2 and 2.5 on the Fibonacci extension, somewhere there. This is going to give me a 1 to 2.2 risk to reward. Let's see what happens with the next candle. If you probably are new, of course, with this one, we also have a fair value gap right here. So this is actually is a good, this is called the unicorn right here setup. Let's see what's going to happen if price taps in. See, price actually did tap in and boom, smash in TP. Okay. So understanding where the order block was formed, okay, it's completely different from SMC. Okay. So I hope it makes sense. This kind of clarifies if you're coming from SMC to just jumping into ICT. I hope it makes sense. All right. Let me see if I can get you another example. All right, this one right here, I'm just going to leave it as it is. You can kind of see. Sometimes we are going to see either one candle, sometimes it's going to be a series of candles. The order block is going to be a series of candles or one candle, right? Not necessarily has to be one, it could be a series or one candle. So right here, what do we have? We have a sweep, right? Price is sweeping all this liquidity after this accumulation, right? Price is sweeping this liquidity very strong to the upside. We have buy side liquidity being taken. And you see this move, this consecutive move right here. 1, 2, 3, 4, 5 candles to the upside. Probably this is not my favorite, I'm not gonna lie. But anyways, it did work as an example. So we do have an order block right here. This is gonna be my actual bearish order block. But when would I know if this is an actual order block? This is, again, let's go here, right? When would you know? Well, this would be an order block if this gets broken. If we have a body of the candle right here, eventually closing below this one. So look at what happens with that candle, right? Boom, closing below. What is that? That is already automatically validating my order block. So I'm at this point, I'm definitely looking for sales, especially probably aiming to these lows, these recent lows right here. So um, at this point, this is up to you. You want to make an entry right away? Well, you can make the entry right away in there. You can place your target, your stop loss right there. Targeting this low. At least I know this is just a 1-to-1. Okay, well, probably you could use your fib, right? Going from the high to the low, just to make a target probably a bit better right there, somewhere there. All right. Um, be careful with this. Let's wait for the next candle. You see, next candle automatically tapping into, I'm already into the sell right there. We're actually having a fair value gap again right here. This is another good potential, hold on, um, unicorn setup. Now, there are plenty of ways right here. You could also be, if you want to have maybe a better risk to reward, you could have entered the 50% of that fair value gap if you wanted to. But let's say in this case, we just are going to be making our entry right there. That's fine. So let's see what price does. Tap it in and then start actually dropping. At least you see right here, we are already sweeping these lows. This liquidity was very important. We're almost halfway down. So this is a trade where I would normally go on break even already, taking partial profits and stop some break even. Okay, whatever happens from there, I don't care. So let's see if it's going to hit our target or not. It's getting very choppy, very indecisive. Probably we're going to get stopped out. And this is where we are. Yeah, there we go. So you got out on break even. Okay, but you get the idea. All right. Where is the actual order block? Well, it could be if the push just took, if that sweep only took one candle, well, that probably that's one. The actual order block is right there. But it took a series of candles. That's the entire order block. Okay, that is entire order block. Now, sometimes you won't be seeing order blocks actually getting mitigated, as I mentioned. Like for example, here you see the price is sweeping a recent low, right? We have a sell side liquidity being taken. After that liquidity, do we have? Let's see if we have an old low being taken right here. No, it's not sweeping this actual low from here. You see, it's not taking that liquidity. However, look, this would have been an order block. This one, right? The candle did close above. You even had a fair value gap right here, right? This could have been probably another unicorn right there, right? But guess what? Price just kept pushing, pushing, and it went very high, you know? And if you look at it, like if you were waiting for eventually price to come back and activate your order block so price would go up, no, right? This is far too gone. To me, this setup would have been gone. And not just gone, it's just not a good setup because, again, it's important. Remember what I explained at the beginning? You need to be seeing an old liquidity being taken as well in order for this to be a really good setup. If it's not, you cannot just be trading order blocks anywhere on the charts. Okay? Like right here, sometimes you might actually see an order block for continuations. I'm going to explain this probably in another video, but when price is pushing up, pulling back, pushing up, pulling back, you see what's happening right here? This is actually an order block. Okay, it's not the last candle. I know that most traders will take the last the first candle before the big move. They take this one, but in reality, is these two candles. It's a series of candles, and the opening price, not the top of the week, the opening price. That's the actual order block. Right here was another order block. When the price broke above, this is another order block, right? Bullish order block. The price actually did end up pushing, but without sweeping you, actually did sweep you before. But you see, the idea here is, guys, be careful if you're trying to follow a trend or you're just trying to catch the reversal. To me, the best one is to try to catch the reversal, but you have to see an old liquidity high being taken before you approach this or before you actually take the chances on this type of entry model. I hope it makes sense. So if it's necessary, guys, maybe watch this video a couple of times. Let me know what you think in the comment section below. Do you want to see more? I'll probably be making more videos about this type of order blocks from ICT, not SMC, but from ICT. And this is another PD array, okay? If you're interested, again, let me know in the comment section below. If you want to follow me on my Telegram, I do have a free Telegram where I post normally setups weekly in there, based on ICT as well. If you want to learn, if you want to be part of my team, maybe make sure to check my website, teamprofitsenglish.com. I am offering a bundle right now, which is a one-time payment and you're part of the team forever. You're going to be getting a lifetime mentorship, okay? It's including my course, lifetime mentorship, private ideas group, and my SMC ebook. So again, thanks again for watching. I hope it makes sense. I'll see you guys in the next one. Take it easy.